Hello there guys, what is going on? Welcome to the Pure Trading channel and the market wrap up for week number 16. My week was quite good considering the volumes and the volatility was not ideal for catching any long-term trends. Nevertheless, the week ended in the green. I'm pleased with the performance of the system thus far. It's treated me well for almost 6 months now. No one knows what the future holds though. The best we can do is rely on statistical evidence of the past and the probabilities for the future. If you want to get hold of the system and learn the basic process, consider subscribing to this channel. Head over to the blog, sign up there, and I'll send it to you free straight to your inbox. After trying it for a while, I would also love to see your comments, whether they are positive or negative. The goal here is to improve and to make money during trading. And so full disclosure, share your winners and your losers. This is the way we learn. We will win in this game if we can keep our losers smaller than our winners and then not give our winners back to the market. With that said, guys, let's head over to the charts. First one on the list is the the United States dollar versus the Japanese yen. I'm always bullish on the yen, so looking to sell the currency pair as soon as the price hits the level over here. So for the whole week, prices doesn't hit the level, so there's no opportunity. Prices been ranging in this area for most of the week. Next one on the list was it's dollar versus the CAD. So looking to buy when prices hits the minor level over here. So prices comes in down to the level. It misses the level by a few pips, like maybe 7 or 8 pips in this area. The reason I'm still interested in trading this is because of the price action and this level it's been that has been created here for a full day. What happens here is a support level that's been respected numerous times. We have a level trader over here looking to buy, and then we have our breakout traders taking out the stops that has been placed underneath this level here. So we have our level trader, we have our breakout trader, and then the last one we are waiting for is our retracement trader. And when all those traders are trapped in this area, then our big player wants to buy, and I would like to try and be in that same trade. So this one formed a nice little 786, failure to follow through, and then the opportunity was good for more than almost 80 pips. So my risk management was about 10 pips below the low, which makes this 35 pip risk, and the profit for me was around about this area over here. So it was on the first bar, so most of the profits were taken out on the first bar. Then we have the Great British Pound versus the Canadian dollar. So I am bullish on the pound and bearish on the Canadian dollar, waiting for prices to hit this level over here. So prices comes down into the level. It does create a nice little divergence. Actually, it's a very nice looking divergence. However, if we look at the price action and the potential entry, it is very far and away from where the potential stop should be placed. So this stop is about 110 pips. So for me, on a 15-minute chart, it's not justified to have 110 pip stop, and for that reason this trade was filtered out of my plan. Just to continue on the Great British Pound versus the CAD, just have a look at this one. This is on the Thursday, I think the 18th of April. good news comes in for the pound, good retail figures, and then look what happens here. The good retail figures pushes the price up slightly, and then it creates a pattern, and it also creates little pin bars and clues that everybody should be looking at buying. So the price action shows that you need to start buying. The level is quite good. This is the open and the close of the previous day. Lots of traders are looking at this level, and there's lots of stops under this area. Plus we have the good news for the pound. Everything wants to push the pound up, and then what happens, it creates whatever it does here, and then a drop down of about 60 pips. So for me, this was a whole stop hunting area. So no opportunity for me though, because I was looking to buy the pound. So I'm still bullish on the pound, and I think that eventually this will shoot up against the CAD. When? I don't know. Then we have the euro yen. For this one, I'm looking to short the euro against the yen at this level or the next. So let me have a look at what happened on the chart there. This was a nice one on the Monday. Usually on a Monday, I don't take any trades unless the previous high, which is the Friday high, has been taken out or stop hunted. So in this case, the stop hunt or the high is taken out during midday. But what got me really interested in this trade was the high was made without the corresponding high on the RSI. So that's what we call a divergence. And then that creates the setup. For me, this was a 35 pip risk. And it was good for about, I think it's about 50 pips. But just look what happens here. I'm entering the market in this area over here. So I'm positive about 31 pips from the entry all the way down. Yeah, I'm making about 35 pips over here. Then what happens is my target is not reached yet. My target is way down here. So this is the Monday. Tuesday, I'm up by 31 pips. And then prices comes against me. It goes against me by 25 pips. So I'm negative 25 pips. And this happens after, I've been in the green. I've been in 31 pips up before, and then I'm suffering a 25 pip loss in this on the next day, and it really nearly hits my stop loss up, which would be up here in this area above that point over there. So in this area is where where you really have to start thinking about your strategy and whether you are going to stick to what you know is true based on statistics. So for me, statistically, the setup works a good number of times. So there is no reason for me to actually become fearful after losing 25 pips or after prices are 25 pips against me. This is where you stick to your strategy. And then in this case, it actually paid off, but much later. There's some good news on the pound during the same period. Again, just I'm minus 25 pips after being positive 31 pips. Then we come into I think this was the Thursday, and then there's good news for the euro because of the French and the German services and manufacturing numbers comes out, with good numbers, and then you look and say, oh, I'm supposed to be buying the euro because the numbers are good, but just look what happens. Prices comes down, it hits the target, irrespective of what the news was. So in my strategy, I'm aware of when the news comes out. This was a scheduled event. It was supposed to come out, I think, on the Thursday morning, London time, and I'm still in a trade even though the news is coming out. So what you could do is, you could move your stop down to break even or whatever, but you don't have to start taking losses in this area, because at this point here and at the point the news comes out, I'm still I'm not in the green yet. I'm positive only once the news comes out, and the actual news was against my trade. I don't know if that makes any sense, guys. Let's just go over to the next one. Next is the CAD versus the Japanese yen. I am bullish on the yen, bearish on the CAD, so looking to sell at the major level over here. So yeah, this is also a nice example. The major level is much higher up. This was the minor level. And the reason I was still interested in trading the minor level was because of the price action in the area. We have for a whole day prices not able to break through a certain level. It's been tested a number of times. And then we have our level trader, and he is for me the clue that I am still interested in taking this sort of setup, even though the level is only a minor level. The setup is just too good. So the level trader, he takes the shorts in this area. Then you have your breakout trader who goes against him and takes out the stops over there. So we have our level trader and the breakout trader. All we need now is our retracement trader. And once we have all those traders in our trapped in this area, we have our big player going short, and that's where I like to try and get my entry as soon as all three types of traders in this area are trapped. So it happened twice this week with a massive bar, and I've taken the profits on the first bar. Let's see, it's only a 25 pip risk, and the target is 27 pips. So it is an aggressive entry, because the a more conservative entry would be a little bit lower, below the area over here. Next, we have the Australian dollar versus the New Zealand dollar, and for this one I have a neutral bias. I'm not really concerned about whether we are buying or selling. All I'm looking at here is the technicals and the levels I deem important. If we have a look at the chart for the New Zealand dollar, so here prices comes in, we have good unemployment numbers for the Australian dollar. But if we notice what's happening here, I don't get any setup. I don't get any setup to go short, so I'm filtered out any opportunities going short in this area. And prices are flat throughout the for a few days, probably because of the bank holiday over the next few days. So there was no trade for me on the Australian dollar versus the New Zealand dollar. Next, we have the Australian dollar versus the Japanese yen. So in this case, again, looking to short the Australian dollar versus the Japanese yen on close to the minor level. Let's have a look. So prices comes in, and here we go. Look at how nicely this candle respects the minor level. It just touches it, and as soon as prices touches the level, I'm starting to look for some sort of setup in the area. And then this one created a 786 fail to follow through setup. So the entry was with a 40 pip risk, and I don't think prices has come down enough. Let's just have a look. The entry was in this area and there, so my stop is about 40 pips, which means I need to take about, I think it's a 55 pip win. So yeah, this one doesn't reach the area at all. It just starts leveling out over the holiday period. So it's either close the trade at 1:1 during weekends, or unusual behavior in the market, like we're having now with the Easter break period. So you can use your discretion here, whether you close 1:1 or you leave trades open during the weekend, perhaps with moving your stop down to break even. So that is all, what you can, the various ideas and plans that you can use in this area. And also for me, I had 3 different opportunities for trading the Australian dollar. So I felt that I am overexposed on the Australian dollar. So look at this one. Again, the Australian dollar versus the Swiss franc. So again, shorting this would be the idea as soon as prices hits the minor level. So what happened on this one? Yeah, this is exactly the same. So prices comes into the level, but in this case it creates a rat trap, which is confirmed also by the RSI. So the entries here with a 30 pip risk. So if you look at this, it's ranging again. So because prices are ranging, we are in the Easter period, and we are over during the weekends, and I'm basically at a negative 5 or 6 pips. So what you do in this area here, it's all up to you. The thing is, you need a plan. You need to know exactly what it is you're going to do before you even get into the trade. For me, it was quite a difficult decision because my target is 42 pips. So should I close the trade? Based on the reasons I've just told you, I'm overexposed also on the Australian dollar. So in this case, I took a 5 pip loss on the Australian dollar, versus the Swiss franc. But then, if we have a look at the other trades, I was in the profit on that. So it doesn't really matter. All in all, I'm in the green on the Australian dollar. So for me, no reason to take any further risk on a currency pair that you already taken profits on. And I think that was the last for the week. Yeah, Australian dollar versus the franc was the last. Thank you very much for watching, guys, and I'll see you over the weekend for the market outlook. So trade safely and prosper. Bye bye.